Hello traders, welcome back to another Trade Your Way video. I'm going to show you how to use our divergence strategy. So number one, get your fib tool and look for the last high and the last low, which in this case was back here. And then what we see is an extended move up last week when we had the rally, and we're starting to see divergence, strong three-wave divergence here, all the while price is making high highs. So there's your fibs. Look for the extended levels of this new range. So yeah, you can see the 127.2, the 161.8, and the 176.4 are our fib extended levels. Once you have them, number two, what you do is, it's optional, but you can do this. You can go to your fib levels and untick the ones that are no longer being used, the ones that are inside the range, so between the 0% and the 100%, because we have broken out and broken up. And thereby leaving just your fib extended levels, which are the focus for when we are looking for a divergent strategy. This is a 1 hour chart on the pound yen, and as you can see, we have lots of divergence, lots of signs of volume diminishing. Price as well started to stall and consolidate around these fib extension levels. Finally, number three, third option then, is once we've established that we have extended and made new highs, we can do one of two things with these fib extension levels. We can either remove them from our chart completely, or just pull them back like that to leave them on for reference, or alternatively put them on a different chart, different time frame, so they don't interfere. But for the purpose of this exercise, I want to show you exactly this three stages that we do. So first step, second step, final step, get some fibs, new fibs. And what you want to do is, because fibs are dynamic, the tool is dynamic in terms of it not being static, which means that we've plotted it to the upside to monitor the breakout and look for the fib extension levels being tested along with divergence. Now we have divergence in play, we are looking for price to drop back down. So the third stage is to plot some fresh fibs with the 100% at the bottom where the original price rallied up from, and we're looking for consolidation and a corrective pullback, ideally to the previous structure, the 100% level, which is currently at around 147.57. And also by plotting the fibs to the downside now with 0% at the top, and we're looking at this 1 hour reversal candle and some rejection, we're looking for price to put in some form of a sell-off, corrective pullback sell-off, which in this case would be first target down at around 147.60 if we just round up, because the 38.2 is at 147.58 and the previous structure is at 147.57. So I would like to see a nice corrective pullback of about 40 pips from current standing, 40 to 50 pips depending on where you're getting short. And that is how we plot fibs to do with our divergence strategy and how we capitalize using the divergence indicators. If you want to find out a little bit more about our divergence strategy and how accurate and powerful it is, just get in touch at ALX_TYW. That's my Telegram direct message.